business news. Joined here on Set In Fact in the studio by Brian Quinn. And Brian is starting in China today. The latest economic data really raising worries of a pretty intensifying slowdown there.
That's right, Stuart. Beijing just releasing its quarterly GDP figures. Those numbers missing expectations amid a number of headwinds for the world's second largest economy. Among them, power shortages, disruptions to the global supply chain, and a debt crisis in the real estate market. And that is a sector that has been a crucial driver of economic growth for China in recent decades. Inka Oyetade has the details.
After its strong recovery from the coronavirus pandemic, the world's second largest economy has shown signs of slowing down once again. GDP in China grew by 4.9% in the third quarter, a figure much lower than the nearly 8% seen from April to June.
The economy maintained its recovery momentum in the first three quarters. International environment uncertainties are mounting, and the domestic economic recovery is still unstable and uneven.
The dip in growth has been caused in part by severe electricity shortages, which has left some households and factories without power for days. The blackouts have had a knock-on effect on steel and cement production, driving down profits. Debt amassed by property developers and home buyers is also putting a strain on the economy. Last month, China's second-largest developer, Evergrande, missed bond payments, with construction as 800 of the company's site projects at a standstill. There are fears that the crisis could spill over into the property market, hitting prices hard. The pandemic is still having rippling effects on the economy. Ongoing coronavirus restrictions in some parts of Southeast Asia has led to semiconductor shortages. The dip in supply has also created a backlog in car production for some companies. But it's not all bad news from China. Exports surged in the last quarter, growing by 28% last month. Domestic consumption in the country also remains strong.
Well, that slowdown weighing on global markets as they kick off the trading week. Here in Europe, major indexes opening in negative territory after solid gains last week as earnings season gets in full swing. Positive retail data out of the U.S. on Friday helping to mitigate that Chinese economic data somewhat. However, the London FTSE 100 down around 0.2%. CAC 40 here in Paris down 0.6%, with the DAX in Frankfurt off by around 0.4%. Asian indexes, of course, took a hit from that Chinese data as well. The Nikkei in Tokyo ending the day down slightly. We got the Kospi in Seoul down just over 0.25%. Hong Kong down over 0.4% as shares in Chinese property developers fall amid worries that the debt crisis at Evergrande could spill over into the sector at large. China's central bank seeking to reassure investors that authorities have a handle on that debt crisis. Take a listen here.
近期个别大型房企风险暴露，金融机构对房地产行业的风险偏好明显下降，出现了一致性的收缩行为，房地产开发贷款增速出现较大幅度下滑。
Facebook, meanwhile, says it's planning to hire 10,000 new employees in Europe over the coming 5 years to build a new virtual reality internet platform. Dubbing it the Metaverse, the company envisions a system that blurs the lines between the physical and digital worlds, allowing users oceans apart to connect as if they were face-to-face. Few details so far on the nature of those European hires. Critics have suggested that the ambitious and somewhat vague proposal may be part of an effort to distract from a raft of bad PR in recent months, in particular, congressional testimony from a former company insider turned whistleblower. And finally, for business, the shows will go on. A planned strike by Hollywood's top crew union appears to have been averted at the last minute. The International Alliance of Theatrical Stage Employees includes camera operators, sound technicians, makeup artists, and more. 60,000 of its members had set Monday as the deadline for the film industry's biggest strike since the 1940s. The union had been seeking longer rest periods and higher pay in an industry infamous for its grueling work schedules. The rise of streaming platforms has resulted in a production boom, but also exhaustion for many behind-the-scenes workers. The IATSE says it has reached a 3-year deal with studios just hours before the strike deadline, with the union president calling it a Hollywood ending. Stuart, all's well that ends well, I guess.
Well, it's nice to have a happy ending, I suppose.
Sure.
Yeah, thank you very much. Brian Quinn with business for you here on France 24.